All right, good evening, guys. Ken at Untitled Capital, nightly strategy podcast for October 15th, 2020. This is starting the 7th month of the nightly podcast. Where does the time go? Let's see what we have today. So we're going to take a look at our 30-day look back. I will note that our 30-day high just dropped a little bit. So 31 days ago, what we had was the peak price at 358.66, but now inside the 30-day window that drops down a little bit, and then starting tomorrow, this 10-day high is going to be the 30-day high once again. So the 30-day NDX is going to look a little different. The 30-day low is still down here at 319.56, where the long-term fair value crossed the Z3 line into this little range here. So this whole price action is still well above that long-term fair value. At one point, this was like 10 or 12% above the fair value, and then that 11% sell-off brought it all the way back down right to the fair value, where it found support and rebounded nearly to the previous high. We now have a third day of selling pressure. So yesterday gapped up slightly compared to Tuesday or to Monday, and then sold off sharply. I guess it was Tuesday, yeah. And then Wednesday closed weekly below that 2-day low. Well, today, interesting, there was a big gap down, and then the market just came grinding all the way back up out of the middle of the dragon, which looks like it held as a support level in here at Z1, and then had a directional move the rest of the day to bring it back up almost to where it closed yesterday. But that was that felt like risky business today, because that gap opening had negated all previous 4 days in a row and put us right back into the river. But then buying pressure came along. So the RL30 extension is still providing some support here, just below the low of the day. The PSAR today was at 337.15, right at the Bollinger Band mean. And tomorrow it's up one more step at 339.23, still well on the other side of the dragon. We got the three layers of support of the dragon here: bottom skin, spine, top skin. You got the Z1 here at 345.30. To the upside, we got the RL90, the baby dragon, and then the peak RL10, which is also the RL10 price, right at the 12 o'clock position. And that's right at the Z2. So that looks like a significant price level, 351.86. If it can get through that, then the resumption is in play. But otherwise, this is a logical place for this thing to have peaked and to revert back. So if we take a look at the last time that it peaked and rolled back, that's the shape of that price action. So if we brought that over here, that's the kind of price action we could get in 5 days. This could be all the way back to the 10-day low and the bottom of the dragon. All that is in play. And as we get closer to the election day, which is right about here, as the election starts to influence this, could it be a sharp sell-off like that? Certainly. In this crazy election cycle, anything is possible. All right. let's see what we have. Now, to the upside, if this maintains, then it's got to break up just above the high of the day, about 347.5. Then it's peak dragon, or a peak RL10, 351.86. Z2, 10-day high, 30-day high. But really, starting tomorrow, this 30-day high here is really going to be here. So this is a combination of a 10 and a 30-day high. And then Z3, which is rolling over and converging, is in play also. To me, the downside feels more likely. It would not surprise me to see another test of this Z1 and today's low. This would be a normal, in the same way that this tested the previous day, and there were that's 3 tests to the downside, and it hasn't really passed. I mean, there was some tactical buying today, but man, it still finished fractionally lower for the day. So this is a purely tactical market, and there's trouble ahead. Let's take a look at what worked. So we have the S&P down a fraction at 0.12. It was down, 1.5% at one point during the day. So there's the S&P at 0.12. The Dow minus 0.3. The Russell was actually pretty good today, up 1%. So there was some buying pressure as the day rolled on, and Treasuries gave back. They've been on a 3-day roll, so they gave back a little bit. So this is cautiously optimistic when the speculative index is up and the defensive index is down, and S&P came grinding back during the day. There's a possibility some upside in here. Let's take a look at the sectors. Here's silver and Mexico up 1/4. Consumer discretionary 0.37. Finance and volatility up 0.77 and 0.87. There's the Ackman hedge fund up 1%. Energy up 1.2, and oil exploration up 2% for the win of the day. And now some of the the companies that dominated: Virgin Galactic win, U.S. Steel with another good day, Devon Energy we talked about yesterday, having sold off so sharply that it was in and around the value territory. Cliff and U.S. Steel both, in the metals, did really well. Now, we talked extensively about Caterpillar, and that just crushed it today, intraday. It had about 7 or 8 patterns of Kata 2, and that's going to be a chart worth studying. To round out the other winners, Boeing, Intel, Walmart, DuPont, Cisco, and Twitter had a little fractional gain. On the weak side, we had materials down 0.3. Technology, broad technology minus 0.45. Emerging markets, healthcare, and wheat and precious metals for the defensive metals there, down 3/4. Brazil and Japan down 0.8. Commercial real estate 0.9. The FANGs 1.1. Clean energy, a second day of sell-off at minus 1.23. And then the triple techs down here minus 1.4 and 2%. So the range of the extreme moves in our symbol stack was not great. It's when the best and the worst were plus or minus 2%. That's a tighter convergence of our array than we normally see. So this is feeling like tomorrow will be a test of who's willing to hold these gains over the weekend. You know, if we take a look at, if we go back to the market, there have been some nice gains, and a 10% gain here in the last 15 days. But there's been some weakness that had a little recovery, but there's been 3 shots taken at all those open profits. So who wants to hold those profits over the weekend? So if tomorrow could be a good day to run those stops, and so I would be least surprised with a harsh sell-off in the morning that would try to test the downside, maybe even down as far as the PSAR flip, and then we could see either a tactical rebound or just a continuation of the sell-off. So that would be my expectation tomorrow. The least surprising factor would be morning selling, and then it's a toss-up. If you see tactical buying, that's good for the market on Monday. But if you have a sell-off and then a follow-through sell-off in the afternoon, then that really bodes poorly for next week going into the election. That'll be everybody just trying to protect what gains they've made in the last 20 days. So that's what it looks like to me. All right. So I wanted to share some of the charts of interest now. Here's a swing in treasuries. And this one's, the Treasury swing has been very interesting. From this consolidation zone, there was a nice breakdown, which we cashed, a critical state compression, and then a breakout of like 3 days all the way back to the Bollinger Band mean, and then today started selling off. So that bodes well for the broad market next week. I think the increasing certainty of Biden's victory is having people start taking some positions. That's what it looks like to me. So treasuries, I just want you to know this is hardly the behavior of the risk-free rate of return. So treasuries, when they swing, are pretty interesting. Here's a nice move out of this consolidation area up, a complete reversal all the way back, another consolidation, a breakdown, and a break back. So there are some swing trade possibilities in critical states from treasuries all the time. I'm treating this as a critical state right here at about 162. And I believe, it's postured, with today's little bit of a sell-off, it's postured ready to go either direction. Now, here's a chart on oil and gas exploration, XOP. Now, we know that is a good frog candidate intraday because it's very liquid, very directional, lots of volume, narrow spread, and it has a nice swing trade characteristic like the energy sector itself. So this thing is a frog champion because it gives you nice, strong, above average directional moves, both intraday and on a swing. So that makes it a perfect candidate for that kind of targeted trading. So of interest was this big gap down to the low of the day. And now I want you to each one of these black boxes represents a Kata 2 setup, which is that lazy W and a higher low followed by an RLXD. So I want you to notice in every box, here's the RL10 excursion. It rebounds, pulls back to a higher low, and rebounds again. And when it crosses the dragon, now we're in good shape. Let me try to make this a little easier to see. Okay, so that's the pattern that we want to trigger on. is the well-defined low. And the steeper the sell-off, the better, because then that almost becomes like this would be the supported spring crossing. But if you didn't get that, it pulls up, pulls back, and taking the second leg up is what we're doing. And now you can see we want to get this entry at the RLXD, or when it takes out the hump of the RL10. In this case, it's good because it's also it's crossing the VWAP. So this really is a low risk entry because your stop is here and your entry is there. And this thing, this may have gotten you out, but that would have gotten you back in, and then you have a nice move. Okay, so the low, higher low, and the RLXD entry, CATA 2. In this box, RL10 low, higher low, RLXD entry. You could even argue that there's another one right here, because sometimes these boxes will overlap. So let me draw that one now. So here in this blue box, I just want you to notice. Again, you have that same pattern. This is almost like an overlap. So you have a low, a higher low, bang, that's an entry. You wouldn't be wrong if you said, hey, this is even better because I've got two higher lows. That makes this entry even stronger. You say, yeah, but Ken, isn't the next one also a, yes, it is. Three higher lows. So if you had this one as your first entry, you'd be justified in adding a second entry there already. So once you get into now if you were in a 3-minute chart instead of 1 minute, this would probably just be one or two humps. But I wanted you to see the fact that these can overlap pretty easily. Okay. All right, so now in this box, you have the identified low, really nice move, pull back to the Bollinger Band mean, makes a reversal. That RLXD is a no-brainer because now you still are thinking from here, it's still got to get back to yesterday's close, and even yesterday's VWAP is much higher. But if you go to yesterday's close, this thing should be able to get over to here, so that you still have plenty of room to the upside. All right. Okay, now in this box, you have the low, the higher low, the RLXD, and now notice that this is winter turning to spring. That's always good. In the same way that this one, you have a low, a higher low, and now the fall turns to summer. That's a good entry there. I would also argue that this is good here because you get the RLXD. That's supported fall crossing. That's a supported summer crossing, and clearly an emerging dragon because it broke. You're entering after it's cleared that hump. All right, moving on. Oh, sorry, this one is. All right, so on this one, a little harder to see, I think, but you have the low, a higher low, RLXD, and the fall, or I'm sorry, the spring has turned to summer, so that makes this a really good entry. And you're getting ready to get the Z3 pinch breakout anyway, but that's a really good entry. Now on this one, you have the low, the higher low. So you have this little triple bottom, just call that one low, a higher low, the RLXD, and again, fall has turned to summer. So that's a great entry. And, you'll probably be exiting somewhere up in here. Okay, here's your here's a low, higher low, RLXD entry. This one is a low, a higher low, RLXD entry. That could be a second position off of this one. Here you have a low, a higher low, the RLXD, and again, this is a supported spring crossing where you have the winter turns into the spring with a PSAR flip. Now you have a low, a higher low. So now you get this entry. So this was XOP. So there was almost 10 opportunities for kata number 2, that lazy W, higher lows. You get the RLXD. And I want you to notice that just as in the supported spring crossing, the harsher the winter, the harsher that sell-off, the better the follow-on move, because it has farther to go to recover just to the previous test. And then when this test gets broken, now you get that relief run to the upside. So that's always good. Okay. This is Caterpillar. I mean, Jiminy Crickets. Just each box, a low, a higher low, the RLXD, and spring turns to summer, bang. You could even have entered one here because you got low, low, RLXD. So a low, the winter turns to summer, a low, summer crosses the dragon, low, RLXD, low, higher low, RLXD, plus this is turning from spring to summer. God, that is so good. A low, a higher low, RLXD, spring turns to summer. A low, a higher low, summer crossing. I mean, from the first position, you could very easily have ended up staying in that one the whole way. I moved from 162 to 166 by the time this thing closed. It's 2.5% on the intraday move. The other thing that makes these last couple sets really nice is that you've cleared the previous VWAP, which was here. So that makes 1, 2, 3, everything in that whole sequence really, really solid. Plus, you'll notice that you're pulling away from, anytime you see a bump like this, where the VWAP gives you an accelerant, that means there is huge volume being hit. And notice how much volume there was on that spike. That's a symbol of a huge hit to volume because it's offsetting, it's raising the average price from all the previous volume that was transacted. You get the same thing here. This was heavy buying pressure in that space right there. So that's going to be a support level tomorrow, 164.7. So even though today started off with a big gap down, I just want you to notice I'm just going to follow the. I want you to notice all the winters turning to spring with the RLXD, and all these little higher lows and break out from Z3. A low, a higher low. There's your crossing, and up it goes. Tesla had some opportunities in here after that supported spring crossing and the intraday move. But here's a low, a higher low, and there's an entry. You probably scratch that one. There's some collapsing dragons in here for Kata 3, but I really am just looking at Kata 2 today. So here's a low, a higher low. That's an entry. Mexico, I mean, Jiminy Crickets. Here's the low of the day, a gap down to the low of the day. Hybrid frog, you cash it somewhere up in here. You have a collapsing dragon right here. Here's Kata 2 in the other direction. You have a high, a lower high. That makes this a short entry, which you end up cashing right down around here with a stop and reverse at the same price that you bought it before. And you got this move, you get the same move. That's how much buying pressure they have. Then you have a low, a higher low. On Mexico, that is such a no-brainer. It's not even funny. And then just notice this little stairway to heaven here. Think about the positions you could be adding. That's what excellence looks like. That's why EWW Mexico is a frog champion. Intraday directionality. All right. Those are the things I wanted to cover from Kata 2 today. Just why it's a relaxed SSC. It's like the second entry into an SSC. So if this was your supported spring crossing entry right here at the yellow dot, then the supported fall or supported summer crossing, that second leg up, when you see that that low is put in right here, a low, a higher low, that is a really good entry right there, especially as crossing the VWAP. Holy smokes. So I was doing some reading on adult learning theory and sense making and building a body of knowledge. And the recommendation in there was if you were engaged in a research program and you made 3 one-page note sheets each day, at the end of a year or two, you would have such an enormous body of knowledge, of integrated knowledge to work on. That's what these chart markups should be doing for you. And you will benefit from doing this kind of work and self-analysis and looking for the patterns. They just leap out at you after you do this for a couple months. And these patterns are just leaping out at you. You just can't miss them. Kata 1, 2, and 3. Chain trading. Man. All right, let's jump into the daily report. I did my little presentation today to Colorado Tech University, their doctoral studies program. You have 100 people in the audience learning to be doctoral researchers, change managers, and strategists. You'll be glad to know that the things that we work on were a prominent part of that presentation. All right, let's go to the daily market health check. We are still firmly in bullish normal conditions. Let that come up on your screen. There we go. Bullish normal. We are still oversold sharply on the 3-day. The 10 and the 30-day are still in pretty good shape. So this is a short-term warning. Still postured for a sharp volatility move in either direction, according to Risk Z. It could go either direction. So we are in a critical state as we approach the election. ATR percentage continues to decline down to 1.49 now. The upward move of the ADX stalled today. It was above 19 yesterday. Today it kind of cooled off a little bit to 18.7. So this is a non-directionally trending market, which means that whichever way it decides to vote, there will be either a relief rally after the election or just a panic selling, like if the election is so close and Trump starts being pig-headed about transition of power or how to handle the election results, this could get ugly in a hurry. So we're postured for that kind of volatility. The only tech in the min pains is Intel, which had a good day today. So did Procter. So did Cat. So did McDonald's. I mean, those are all pretty good candidates right there. The energy sector is still pretty weak with Devon Energy and Amgen, Simon Property Group, Wells Fargo. So actually quite an array of weakness. In the Dow tactical summary, just a couple dojis today. Today was more of a directional move than anything. That big gap down and then the sharp reversal in the S&P. Still got a handful of pretty good auto framers. Let me let that come up on your screen. There it is. So we've got 5.1 in Amgen, 7-1 in IBM, 3-1 in Johnson & Johnson, 2.5-1 in Verizon. Seeing these, the breakout in Caterpillar, like we looked at yesterday, was really decisive today. Really nice move. And McDonald's joins the party. Look at this nice move in Caterpillar. We're going to go to the film here for a second. This is what that intraday move in Caterpillar looked like on the big screen. Notice that big gap down to the edge, very edge of the dragon. It did nothing but go straight up all day. Reminiscent of this last time it did that. Gap down to Z-1, strong day followed by this beautiful swing. So this could have been the shakeout move just to gun the stops, accumulate inventory, and posturing up for another strong move. So we should be mindful of that. Let's see if we can take a look at McDonald's real quick, see what they got going on. Yep, McDonald's in great shape. If we wanted to look at it from a distance, the kata number 2, here's a swing low, a higher low, so there's a kata 2 entry. Now here's a third higher low, and there's a kata 2 entry. All good and closed strong, and nothing wrong with that. That's like at an all-time high. All-time high in McDonald's. They're winning the the COVID restaurant game. People just saying, you know what, could be worse. All right. In the ETFs, no dojis today. Today was a very decisively directional day. So let me let that come up on your screen. There were no breakouts in the NDXs. There's no patterns on the swings except for three 551Ws, and that's very favorable. So we'd be interested in an EFA and EWJ and real estate. Is in. Let's see if we have that on here. IYR. Boy, that's about as non-committal as you could get. But I kind of like that it's back right along the side, this Bollinger Band mean yin yang action right in here. So I think I could trade that one tomorrow. Again, as soon as it breaks out one way or the other out of that yellow box, let's visit that one tomorrow and see what happens. What I like about it is this sharp cycling swing that it's got going on, like this move here. Came down through the Bollinger Band mean all the way down to Z3, sharp reversal, all the way up through Z2, Z1, or I'm sorry, Z2, Z1, 0, +1, halfway to 2, and falling all the way back down here, and then closed right exactly in that middle. So I could see this starting to resume, finding support here, and then we'd have this kind of action. We'd have a low, then this would be a higher low because that RL10 will roll up. So that could end up being a nice entry somewhere in this region around 83 tomorrow. That could be fun. By the same token, this little sell-off here could just match this all the way down. And notice how quickly, once it collapsed through here, how quickly that broke down. So that could just as easily fail tomorrow. So either direction it goes out of that yellow box, I want to be in that trade with about a 50-cent trailing stop intraday. That one's going to be fun tomorrow. In the auto framer, got a few more that have now triggered now that we're a little further away from the 10-day high. IBM, healthcare, EFA itself, the big index is all in that one. Lots to choose from with all your framing data already built in for you. Our 5 little symbols did pretty well today. Boeing, Nike, Cat, Procter, and McDonald's all turned in pretty good performances. The one-day pops, tech, Apple, healthcare, that's pretty good. Be ready to ride those tomorrow. I think it's going to be a tech mover day tomorrow. It's either going to be a buy on dip opportunity and follow through, or it's preserve all the tech gains so far and just wait for the election to sort it out. So I'm not going to be surprised by either one of those moves. Dominating summertime performances here. Not surprising with the big nice move of the last 10 or 11 days. Disappointing breakdowns in here. Merck and Verizon especially weak, and then all of these breakdowns here. There's some weakness in the finance sector there. American Express and Goldman Sachs. And you combine that with weakness in Visa. That's a finance sector that's really shaky. Europe and the Euro-Asia blend got smoked today, as did healthcare and emerging markets. Japan. Where was the strength today? Old reliables, Caterpillar, McDonald's, industrials and mid caps, and even I would add the small caps in there too. That's everything I want to cover for tonight. Let's get this published and posted and get back to work. Let's frame those trades and then trade our frames. And we will see you tomorrow. Hey, I'm going to start another focused, like guided hybrid frog trading workshop, I think, on 1 November. I'm going to be soliciting new students, I think, from the Tharp Institute and from John Q. Public, but everybody that's a Patreon member, more than happy to have you guys attend. But sometimes it helps seeing it through newcomers' eyes and hearing the original explanations the first couple of times. Again, it's that reinforcement and patterned repetition and periodic recall. Those are the things that lock in learning. So I'm looking to start that around 1 November. More to follow.